Hello. Hey, thanks for stopping by today. Thanks for giving me a little bit of your time. Here we are, approaching Christmas, a couple days to go. I thought this morning I would share a recent article from ResiClub by Lance Lambert. And as I've mentioned before, ResiClub puts out great content. It's great. Their free subscription is awesome. Like twice or three times a week, it just is total gold. So last Friday, they put out their newsletter was what home builder stocks are telling us about the 2025 housing market. So that caught my attention. And here's the thing. They use Lennar, who is a publicly traded company, they use Lennar's quarterly reports to come up with this data. And what it is, Lennar is forecasting that the first quarter of next year, so Q1 2025, that their margin is going to drop to 19.0%. Here's why that's important. That's actually the lowest it's been in over a decade. So the history of the way that the margins have gone for builders is that they were pretty static, and they're running around 20% up to the pandemic. So 2015 through 2019, they're running around 20%, 21%, super consistent and stable. And then the pandemic years, they shot up above 25%. So they were just making tons of money. Good for them. And then post-pandemic, it kind of came back to that 21%. But this last fourth quarter for Lennar was super low. It was barely, I don't know if it broke 20%, and next quarter is going to be 19%. And so the question is, what does that mean? What does that mean to housing, the industry? What does that mean? What's the signal sending? So first, let me show you the chart. Here's the chart. You can see for yourself. You can see their Q4 is 21.8%. That matches them, to a performance similar to 2017. That their forecast of 19% is not even in the radar screen for past years. So this is definitely sending us a signal that we probably need to pay attention to. What we needed to figure out is, what is the signal telling us, right? So first we got to go, okay, gosh, why are margins shrinking? What in the world's happening that's driving this? And we all know the answer. The answer is interest rates are high, home prices are high, and then overall inflation the last few years, most costs are up 20% to 25%. So people's overall, cost of living is super high, so they have less money to put towards housing. And that's created a consumer sentiment that is a little bit angry, but there's fear, and they want to avoid risk because they just don't know where prices are going in the future. So they're taking a wait and see attitude. And so this is causing Lennar and other builders to cut their margins or to increase concessions in order to drive buyer interest. And as we've talked about it before, builders now have the highest amount of standing inventory that they've had for well over a decade. And it's way outside of their typical comfort range. Their comfort rate is expanding a little bit because of the shortage of resale houses, but it's way out of their comfort range. And so they're getting standing inventory and their margins are dropping. Typically, what that would mean is that builders would stop building. They would really slow down building. They'd clear out their standing inventory. They'd preserve future margins. They'd stop building. What's interesting in this article by ResiClub is what Lennar said is, nope, we're just going to take a hit to margin. We're going to keep putting out houses, and essentially, this is my interpretation, we can hold our head underwater longer than our competitors. So these lower margins are actually going to be an opportunity for us to expand market share and to gobble up competitors and to buy competitors. And so they're like, bring it on. We're not slowing it down. I don't think that's how the entire builder market will react, honestly. I think a lot of builders are going to, slow down their building, make sure they clear out their standing inventory, preserve margins, or hold their lots. They're going to want to make sure those margins get back up above 20%, up above 21%. They're not going to go 19, 18, 17. I was friends with a good regional builder. It was a very large regional builder, and he got out of the business because once margins dropped below 18%, it goes, it's not worth my risk. It's not worth my capital tie-up. I'm not going to do this anymore. And it was a giant builder. And so we're getting wobbling to that edge. Now, let's say that the response from builders are, look, we're going to continue to cut margin to attract buyers. what does that mean for the resale market? Okay, if builders are squeezing down margin, now we already know builders are bringing down price points. They're building smaller homes on smaller lots with less amenities to make them more affordable, and now they're squeezing margins. And when they squeeze margin, it can be from a price cut, a concession. It can be from buying down interest rates. There's all sorts of ways that they can erode margin. But then what does that mean for resale? Well, you know what? Resale can cut margins too, right? The way a resale cuts margin is they just lower their price. Just like a builder can lower their price by cutting their margin. The question is, do today's home sellers, do they have an appetite to lower their margin or lower their price? The answer is probably not, because that's what's happening right now. It's not that, if there's a shortage of homes on the market, it's because the home sellers don't think they can get the price that they want. It's either they don't think that they can get the price they want, or they don't know if they can get their next house, the house that they really want, to replace the house they're selling. So one of those two things could be driving that. I understand the low interest rate and the lock-in effect, but it's either I can't get my price or I can't find an affordable house with the right terms, right? And so it's very likely that if builders continue to cut their margin, and that's going to force sellers to bring down their price points, that more sellers will sit on the side of the road. And who knows? It's a complicated market. We're facing all sorts of very fluid factors that are constantly moving our cheese, and we're going to have to navigate and figure out how to serve home buyers and home sellers, and we'll figure it out. But certainly an interesting signal. Now, I would say the silver lining in all this, two things. Understand, as volume seems to keep being constricted and may continue to be constricted for a few quarters, know that there's still the survivor's benefits, meaning that every day, every week, every month, loan officers are dropping out of the business. And so the people that are staying in the business have a bigger market share, a bigger piece of the pie. And so just, staying in the business, which is really how grit can be defined today, showing up every day, not turning tail, there's going to be benefits to it as there's fewer participants. So that's one positive thing. It's okay if, it's perfectly fine next year if we do the same sales unit volume as we did this year, because there's going to be far fewer loan officers. So we all win. Perseverance wins. Perseverance is grit. So, but the other silver lining is, I think Barry's talked about this really eloquently, as of other commentators. We're getting a growing pent-up demand. There's a growing pent-up demand, certainly from buyers that are on the sidelines. They are just waiting for the right, the right climate to buy in, and they're eager. We have a delay in housing formations. Definitely a lot of pent-up demand on the buy side. There's an equal amount of pent-up demand on the sell side. Just the conditions need to be right. The conditions being, people want to get the price for their house. They want to be able to find a house to go move into, and they want to be able to do it in an affordable way. So all this pent-up demand is going to be a giant payoff down the road. We just don't know what that is. And until then, we just have to be aware of all these conditions that are happening, pay attention to the signals, and then become good advisors, and the signals aren't there to scare us. The signals are there to understand, so we become good advisors to help people buy and sell homes. That's it. I found it interesting. I hope you found it interesting. I did a LinkedIn post on this morning where I provided links to the article. I'll also put links in my notes below so you can check out. Subscribe to ResiClub. They do great stuff. Check out my socials. Check out my post on this, where I think I did a good job summarizing a whole bunch of bullet points. I have the links. With that, thank you for stopping by. I hope you got something out of this. My hope is to provide value to you. So hopefully I did it today. Have a great day. Thank you.